Just 30 days ago in my last portfolio update, the total value of my stocks and shares ISA in Vanguard was £11,562.72p. I was slightly up, by not by much, because as you all know, we've seen a really terrible start to the year in the stock market. The S&P 500 is down over 18% so far, the Nasdaq is down 26%, and the FTSE All Share is down 6.5%. There's pretty much nowhere to hide in this market, and that's just since the start of the year. It's been pretty brutal. Pretty much every single stock in the market has gone from looking like this to now looking a bit like that. See, I knew it would come in handy at some point. Now I've just got to make about 100 more videos to actually pay for it. Anyway, now we're back to a bit more calming blue. Let's jump onto the laptop, I'll log in and we'll have a look in the portfolio. Okay, first things first, let me explain why you now see over £51,000 in the account. Don't worry, I've suddenly not gotten into options trading and YOLO'd all my money into some penny stock or anything like that. So, as I may have mentioned in my Hargreaves Lansdown portfolio update and actually one of my previous Vanguard updates, I was actually waiting for my SIP transfer to come from Hargreaves Lansdown into my Vanguard account because I actually wanted to try and mix up some of my accounts this year just to kind of reduce my cost base. Because I want to say that the actual cost in my Hargreaves Lansdown account was actually costing me like £15-16 a month. So I was approaching quite a high level, quite a high threshold there for costs. And I was like, well, I'm just investing in low cost index funds. So what's the point having it in my Hargreaves Lansdown account? Anyway, that transfer has now come across. If anyone's looking to do the same sort of thing, I would say it's a fairly painless process. I just had to initiate that on the Hargreaves Lansdown side, told them the account I wanted to move it to on Vanguard. And I want to say it probably took about a month in all. In terms of moving the investments over, I've got a couple of investments in my SIP, which we'll just go into now. Because my existing fund on the emerging markets was already with Vanguard, that actually stayed in place, called an in-specie transfer. And the S&P 500 fund, unfortunately, had to then be sold down to cash. And then I was actually out of the market for a good couple of weeks. Now, rather than trying to time the market and mess around and then like dollar cost average, as soon as that cash hit my Vanguard account, I did reinvest everything, as you can see now on screen, into VUSA, the S&P 500 ETF, the nice low cost one. To be fair, I probably did save myself a little bit of money, but I was thinking it would be nice if I could miss and time the market and just as things were going down, I can suddenly get in, but I couldn't avoid it, unfortunately. Now, of course, at the moment, everything does say negative, and of course that's not nice to look at, but I have to remember that my cost base for my S&P 500 investment from Hargreaves Lansdown, I think I need to work this out, but I think it was around £35,000. So technically I'm of course massively up in my SIP because it's been invested for a much longer period of time. So I don't let this one worry me. I'm not concerned at all. I will probably add to this one over a long period of time. Remember, with a SIP, you can't touch that until you're 58 as the current rules go. So I've definitely got quite a few years to wait on that one. I may add different positions, same as my ISA, but for now it's a pretty much majority split toward the S&P 500 with a very small bit in emerging markets, as you can see. And unfortunately, emerging markets have been very disappointing recently. And with the current economic climate we're in, who knows, we may see emerging markets remain to be quite flat or quite low, but we'll see. Anything could happen in the next kind of few decades. So yeah, that's the pension. If you are looking to do anything very similar, almost every platform has a kind of a move your pension and move your SIP thing. In my personal opinion, I think it's valuable to move your old pension pots from old, if you've got several different old employers, you might have a pension with Scottish Widows, Aviva or similar. I wanted them in one place because after getting the statements through in the post, and if you actually look what you're invested in, they're probably too diverse in my opinion. You have like a 60% equities, 40% bonds, and the charges, although they weren't ridiculous, but they were certainly a lot more expensive than a 0.07%. So just be aware of that, because I think potentially there's a lot of people out there who are costing themselves a small fortune. Anyway, that's the pension. Now over to the ISA. So absolutely no surprise, but of course we are actually finally down on the ISA. Only actually being dragged down really from the emerging markets, as you can see here. I am actually just about in the green on the old S&P 500, which just really shows you the power of index funds compared to if I was invested in lots of individual stocks. Now, luckily on Vanguard platform itself, of course, you can't actually invest in individual stocks and shares, but if I was a bit more risky and had this on another platform like Interactive Brokers or Free Trade, I probably would have gone into all individual stocks and probably would have found myself a lot more down in the red at the moment. Now, you'll see the spread has remained the same. I'm very much a fan of this spread at the moment. S&P 500 in the long term with a little bit of emerging markets on the side, just because there probably is going to be more opportunity there, but that's anyone's guess. I'm still very much in a position where I would potentially add a little bit more layers of diversification here. So maybe some FTSE 250, some smaller companies, because they have tended to perform well over really, really long periods of time. At my age, in my current position, I'm not intending to touch my stocks and shares ISA for a very, very long time indeed. So at the end of the day, I'm pretty happy with the S&P 500 at the moment. But of course, it's anyone's opinion whether it's very much overvalued at the moment or if there's too much money in the USA stock market, because of course it's got about 60% of the equity and only about 40% of the global GDP. So there is a bit of an imbalance there. But of course, if you can see the future, you have to let me know. In terms of performance, you can see when I actually started putting money into this ISA on Vanguard's platform back in September 2021. And don't forget, of course, you can follow all of those investments along on my account on my YouTube channel. So feel free to do that. Since I've been investing on Vanguard, not a huge amount has happened. We have been up at some heady highs and everything was going well. I think back in March, we can have a look there, 11,901, as I've been putting a little bit more money in. But of course, we've been on a bit of a slow decline from there. As a long-term investor though, maybe this is more of a message for newer people out there who haven't necessarily seen any massive dips in the market or seen any big negative numbers. This is not a time to panic and worry. This is a time to just keep accumulating and keep buying into the stock market. And that's only really if you're in this for the long term. But then of course, if you weren't in it for the long term, then I would say, what are you doing investing in the first place? In my opinion, of course. If you're really trying to build some cash up over 1, 2 or 3 years, then you are going to run the risk and you are running a gauntlet. If you were trying to maybe get money for a house deposit or something like that, I would probably stay away from stocks and maintain a good, healthy cash buffer. And of course, make sure you are indispensable at your workplace so you can keep getting money in. I'll probably add a few £100 into this ISA this month. I don't have a consistent direct debit set up because I'm a bit of a tinkerer. And I have been building up some other portfolios, which you might want to check out after this video, of course. So of course, I've got Free Trade. I do have Hargreaves Lansdown, which I'm not adding to at the moment, but I am building up a nice little portfolio on Lightyear, which you can happily watch after this one. And I've been buying a bit of those US growth stocks, which have been massively hit, which I still haven't found the bottom on, but I am accumulating a few shares in that one. That's in a general investing account, just be aware. So there's where we stand at the moment overall in portfolio value, so we can note this one down until next month. I'll keep the track of both of these if you are interested. Of course, I'll make sure I've shown both my pension and my ISA on Vanguard. I haven't actually contributed anything this tax year yet, which is quite strange. So I think I am going to stick with Vanguard for it. I know lots of people have been talking about platforms like Invest Engine, which looks fantastic, by the way, being literally zero cost, not even a platform fee. Great place to invest potentially. But of course, it all depends what you want access to. But for now, I'll leave you with that one. If you've enjoyed the video, please do me a massive favor and drop me a big fat like. Subscribe for more if you aren't already. I will post these as regular as I can, as well as lots of other videos on personal finance and investing. And if you want to check out my latest portfolio updates for any of my other accounts, check the playlist in the description and I put them all there. And you might want to have a look at my latest Lightyear one next if you haven't already. Otherwise, have a look at my other video because I've been talking quite a lot recently about this stock market crash, and there might be a few things you might be interested in on that one. Anyway, thanks so much. We'll see you in the next one.